Hi everyone, thanks ever so much for joining me. Your comments and your company I very much appreciate, so thanks ever so much, and I hope you're getting some good value out of these videos. In this one, I'm going to give you a trade example and setup that I use in tricky markets, and tricky markets are ones where I guess, most people sit there and they don't know where price is going to go. And you might say that's all the time, but actually sometimes the market is just going, it's just going up and down and up and down and up and down. And there doesn't seem to be any consistency. That's called ranging in trading. And in a ranging market, it's more tricky to trade unless you've got a verified, proper, well-tested system. And my gold trading system I've tested for over 10 years on every conceivable market condition, and I found it fantastic. It provides trades every hour of every day, near the open, especially good trades, and even in afternoon sessions and overnight out of market, the trades do come up, but they'll be on higher time frames because of the lack of volume in the market. So the trade that I'm going to show you today is during an open period, the first hour after the particular market that I'm trading opens. Obviously, trading futures, these markets are mostly open 24 hours a day, and they replicate actual markets, and it's the actual market hours that I'm talking about. So the open and the close of between those periods of those markets will be when you see the highest volume, and out of market hours tends to be lower volume. And when it's low volume, the brokers will charge you more for trading, and therefore with the charges being higher and the volume being lower, don't really trade them. And so at the Trading Academy, we have trades that I have taken consistently. I have a form for each trade, not one with tick boxes in it, but a form which is, it looks like a certain form, and it takes a certain form. The trade forms a shape and is normally followed by a predictable move, and it's that predictable move that I trade. On today's market, you'll see that the market was all over the place, and it never once showed up for a trade until this one particular time. It didn't show up for a trade, so I wasn't fooled, and it looked as though sometimes it might do. But as you may know through following my channel, and if you don't follow, you should do so, get subscribed. If you follow my channel, you'll know that I have very specific guidelines for my trades, and you'll know that I'm looking for a particular type of candle. Now, the market that you'll see when I show you the charts has candles with mostly the candle length being taken up by the wick. So candles with big wicks, small bodies indicate a ranging market, and they're more tricky to trade because I'm looking for a trade when I'm scalping. I'm looking for a trade where the trade lasts for the length of a candlestick. So in near the beginning, out at the end, and take what you get from the trade. And very often they bring great reward to risk. So your risk is extremely small on most of these type of trades, and that's the way to trade. If traders follow these trading examples that I give exactly, then they're going to get good reward to risk trading opportunities. And these opportunities do not come along every candlestick. You know, you are looking for a candle that has a very, very small wick at the bottom or the top, and the majority of the candlestick, as you can see here, is of a colour. So it's either long or short, you know, at the entry of the candlestick. And just as the candlestick that you're entering on turns the colour you expect it to go, and when it leaves an appropriately small stop. So for example, if I'm going short, I'd look for a candle to, let's say, open here and go up, put a little tail in, and then go down. And that's what I'm looking for. And if I get a candle that starts going up and growing and then comes back down, no entry. No entry. It has to go up, down quickly, and then as soon as you get a bit of colour that you're looking for, you're in. And with all the other signals combined, I'm hoping for a good trade. And so you'll see this live here. As you know, I trade around the river of value, and that's something that I have devised myself, the phrase river of value, but actually, you know, quite a lot of traders use the short-term EMAs and they don't know why, but price is attracted to it and repels from it. And it's that repelling that you get when price has been to the exponential moving averages, and in my case the combination of the 2, 8 and 20 EMAs, providing the river of value, and then traders capitalize on it being at value and take a trade, and that sends price either up or long quite quickly and in a solid format, so you end up with a good solid coloured in candlestick. And that's what we're looking for, and that's how you make trades work for you in terms of long-term gains. You take smaller risks than you do take reward, and these one single candlesticks provide a great template for simplicity in trading. You can take candlesticks that are 300 points long, you know, and you know, that's obviously there's a huge amount of reward in there, but the risk would be slightly higher in that type of candle as well. You can take the same trade where the candlestick is 10 points long, the body, with a absolutely minute, maybe 2 or 3 point stop on it. Your reward being 3 times plus the risk. And that's really, you know, how you're going to make some decent dosh, isn't it? Or wonga. Anyway, sidetracked. Let's get to the charts and have a look. You can see on the charts here, you can see a huge amount of wicks on the candles leading up to the open, and that does signify that the market is going to range, and therefore opportunities are going to be scarce, but they'll be there. And when they're there, I'll be there too. And, you know, that's the type of trading that I like to do. And if you like scalping and you want to learn it properly with a system that, you know, is good for you, then you need to get in touch with me. So my name's Anthony Beardsall. I'm going to show you the charts right now, and it's all courtesy of my trading academy. And if you're interested in joining the academy, then you'd be welcome. Let's have a look at this then. In the price action just a few minutes, half an hour roughly after the open, see this big red candlestick on the open. I'd have loved to have taken that, but I didn't. And the reason that I didn't is because it opened right up here. and shot straight down. And that, on this occasion, reading the charts, didn't have high probability of occurring. I only take trades according to my system because I've tested my system for many, many years. And, that's bona fide. And that's what I think traders are looking for, something that works in all markets and is consistent. Whereas if you get this 1 in 10, but the other times it comes down a bit and then shoots back up again, then that's no good, is it? You need a system, if you're going to trade for a living, where it works consistently, and then you can work out your probability. So you can see the candlesticks, all big wicks, small bodies, pretty much apart from that one. And then basically price made its way back up to the 8 EMA, the river being here. But at this stage, you see the blue line of the 8 EMA is above the 20 EMA, being the red line here, and price is below. So that's not consistent. We want to trade up in this situation. So then price comes down and the river switches over, but only just. And then you get a candlestick here, that this most recent 5-minute candlestick is basically price stuck in the middle, touching the 20 EMA and being above the 8 EMA. Tiny little body to it. And in this sort of situation, you're looking at the trading time frame being here on the 1-minute chart, and see what's going on here. And all indications are here that I might have a good trade setting up. Okay, so I'm looking for a river of value trade. I'm looking at this. This is what's happened recently. Price came down. That was a river crossing down. And next candle opened, went up, and then touched the river value and went down. But because things were in the wrong order, i.e. the 8 EMA was above the 20 EMA, price closed back up. So that would have been, for a single candlestick trade, that would have been no good. This, however, looks promising now. So you've got a big move back up to the river of value, stuck in between here. So price has gone through the river of value, and if the next candlestick starts with a little bit of red, I'll be able to place my stop down below the wick if the red disappears and it becomes green, and enter on green. Enter on green and leave it for the whole candlestick. This is in a super position, and I know through my years of experience in being a trader that this could be a good opportunity, and I know to leave the trade on for the whole candlestick that I'm trading. So let's see what happened. Red, green, in, and there. So you've got an entry here, you've got a stop down here, that's 4 or 5 points, and you'd expect this candlestick to be green. So I leave it for the length of the candlestick and take what I get. I've shown you this trade time and time again, and it, even when price pulls back down like it is here now, I'm still leaving it in because I have confidence in this type of trade, and you will only get confidence when you see them yourself live. And it's only through experience that you get to learn these things, but you need to learn from a master before doing things yourself. And that's why I teach people how to trade at my academy. So coming to the end of the candlestick now, and there. So out. So, at this stage, price is way above the river of value. This may well be a green candlestick, but there is also a percentage probability, which is about 50%, that this will be a red candlestick that comes back down here. and that's no good. The only reason I say that it might be a green candlestick particularly is because the 5-minute chart has pretty much all the attributes of producing a solid green candlestick. You know, it's in an uptrend with a doji in the middle, and it's above the ATMA, and it's going up. So that would have been a similar, and there's a tiny wick at the bottom of the candlestick as well. Forgot to mention that. That's vital. And then you would go in and up. But I haven't got the 30-minute chart on here. I've got the 5 and the 1-minute chart, so I'm trading the 1 minute. Sometimes I'm able to be versatile and go through the and trade the higher time frame, but I haven't checked the 30-minute chart right now, so I'm not. I'm just looking at this one. Right, so you can see a big red candlestick appearing here, but price closed way above the river of value. And again, there's a 50% chance maybe of a red candlestick coming in that's like the one that you can see here. Tiny wick on the top. That's a, you know, there are attributes within that candlestick that would say that's a good trade, but it's not part of my system. So I'm looking for bounces up from the river of value, bounces down from the river of value, trades from very close to the river of value and repelling away from it. And that's what I had here. I hope you're getting some great value out of this, and I appreciate you being there. So do ask any questions you've got, subscribe to the channel, and if you want some help with your trading, give me a shout. Cheers for now. Bye.